Today, welcome back to the channel. This is Alex, and today we are going to be talking about basically, should you be selling your stocks now, or is this a time to like start looking into buying because the crash is not coming? So basically, is the crash coming or not? Decide what you should do with the stock market right now. The week is coming to an end, and once again, the week hasn't really gone down. It's been another week of pretty much steadiness. If anything, it's actually gone up for the last 5 days. It's actually up like another 200-300 points for the week. It's only the stock market is only down about 100 points today, which is nothing so far. You never know what can happen, and it looks like it's even going up. But we're gonna be talking about potentially why there really is not going to be much of a crash coming soon, and why this is much different than what happened back in 2008. As you guys can see, if you take the height of 2008 and go down, it went down about 40, almost 50%, if not a bit more than that. I think it was about a little more than 50%. But this time around, the stock market only went down 30% from its height, almost 40 if you take the very top. Almost 40, not quite, like 38%, which is not 50%. That's still far away from 50%. But this time around, obviously the whole thing, everything is shut down, right? So we're gonna actually get into that. This is much different, right? This time around, if you look at the U.S. like business inventories, it actually is not that bad, man. Like if you look at the 2008, look how far down it went. This is like the official trading economics website. You can go to U.S. business investors and see this for yourself. Um, look how much of a downturn it went. It was a steep crash. But this time around it crashed to negatives, but it wasn't that bad. Like it maybe went more down than this because it's not fully updated for, I believe, May or a bit of April, but it's still not that bad. It even rebounded a bit. If you go and look at the capital goods, not counting like the basically the aircraft, I think if you go here, like it barely dipped. It barely even dipped. But 2008 it went down a lot. Um, yeah, it's counting March, and March was a pretty bad time for the coronavirus. So it isn't that bad. Like the capital goods for this isn't that bad, and I think overall, people are like kind of expecting this because I know all of before 2020 people are saying, oh, there's a recession coming. Everyone had cash on hand and stuff like that. Like I feel like a lot of people almost didn't really want it, but they really like knew that a type of recession was coming. Durable goods, like this is how the manufacturing, it went down quite a bit. Like I'm not gonna lie, this is a quite a big steep um like dip right here, but it's still not even that bad. This is for the month of March, so April hasn't been counted fully yet, and even April may go down a bit more, but it's not going to go more down than what it did in March. I don't think. Even if it did, it's not going to be anywhere near close to how down this was. So back in 2008, so that just shows you it's pretty bad. And 2008 was pretty bad, and this time around, it may not quite be as bad, and maybe that's kind of what's reflecting in the stock market right now. The Dow is still about 17% down, so it's not recovered yet. So if you still buying a Dow, you can still make like another 17%, if, or I guess it doesn't really work like that, probably another like 20 or so percent if it does rebound to where it was before. Obviously that's a big if. And the thing is, I if you go look at the US personal savings rate, that determines how much money people have in hand, right? If you go look at that, it's skyrocketed. Look at that. The savings rate almost doubled. Almost tripled here. If you go look from 7 to 13, which is, yeah, it's a double. It doubled, pretty much doubled. If you look at the last 25 years, in 2008, the savings rate wasn't that bad. People were not expecting it. People didn't have cash on hand. People came out from a okay economy, I would say good economy, but they weren't that ready. But look at now, the savings rate skyrocketed. So if that happened in 2008, potentially would have been a lot better. That this graph right here is a very interesting one. It just completely shows you that this time around people are a lot smarter about things, right? People know that no, I gotta be saving my money, I can't be spending it. And I feel like the stimulus payments as well increase the savings rate, especially since most Americans don't have like what more than $1,000 in their savings account. So I guess it makes sense if you get a stimulus check, people are saving that, right? So their savings rate does go up. I mean, my savings rate is already like, I think everyone's savings rate already should be above 10%. Like, come on, that's nothing. But I mean, it is what it is. Like, my savings rate should be like at least like 30-40% if you're trying to like actually buy stocks and get ahead and stuff like that. The personal spending rate, look at this. Negative 7.5. People are not spending. Now, this is another this is very very contradicting, right? People are saving, right? They're not spending money. That is good, right? That means that people aren't going to be in economic hardships, but that also means that businesses aren't getting money. They're making less money. The average McDonald's, the average Walmart, the average market, the average like retail store isn't getting as much money. Like 5 times less if you look at this chart. But this just shows you that people are smarter, they're not spending money. But it also means that the average company, in theory, it could drive the stock market down as well. And it just shows you like that people are just not spending money. That could be a bad thing in terms of businesses not getting money. You need cash to go into businesses to spend money to actually even make goods and like continue to survive. So yeah, that is that. Now, in terms of should you be buying stocks right now, obviously the way I look at it is I always look at it as a case by case basis. I look at Apple, for example. Right now, is Apple at a good enough intriguing price to buy? Apple is basically at an all-time high right now. It's just about $10 off its all-time high. But the thing is, they're not making that as much sales as they were. Their P ratio, which is the price to earnings, right? It's really, really high. They're not making that much money right now. So in terms of buying Apple, you would think that in the future they would have to like start making a lot more earnings, and their price would have to stay the same for it to actually stay. So the risk to reward is not there for Apple, for example. And this is a trend for a lot of other stocks right now in the stock market. Most stocks, it's just too expensive. Like the price to earnings, just in general, it is too expensive. Let's take a look at Google stock, for example. Oh, my bad. Let's take a look at Google stock. It's almost at an all-time high, which is obviously it's a case-by-case basis, but their PE ratio is almost at 30. That is expensive, man. I think, I don't know if Google, you can check it, but PE ratio right now is about a 21.12. That's the average P ratio. So in theory, if you get a P ratio of a decent stock under that, you're getting, I guess, kind of an undervalued stock, but it's 21. So the last two stocks I showed you are definitely overvalued. Like a typical example, an Amazon stock, that P ratio is crazy, 116. That is a crazy high P ratio. So those three stocks don't like, those are just random three stocks I pulled up. Those are pretty much not worth buying right now. But the only thing is, it would be an interesting play is if you guys go for some long-term plays. For example, obviously I talk about it a lot on this channel. A Tesla, if you want to go long-term, there's a potential for a good reward there. If you go very long-term, I would say 1 to 3 years at least. If you look at let's just look at a Boeing, for example, right? Boeing stock. If you look at a Boeing stock, for example, right now, their P ratio is very low. I don't think they're making any money right now, which is pretty self-explanatory. But if you hold the Boeing for the next 3 to 5 years, that is the long-term play. But if you do want to buy a stock, you're pretty much, I don't know if you're guaranteed to make money, but you're in a good situation to make money if you do hold it for that amount of time, right? Boeing is most likely going to be recovering and actually be making money here. So that is that. But yeah, other than that, that is pretty much it in terms of the video. Hopefully you guys enjoy. Hopefully you guys learned something. If you guys were doubting of the economy, I mean, unless people right away this turns and something else, we know that as the economy opens up, businesses may not make that much money. So we just gotta wait and see at the end of the day. I'm personally being patient and not buying anything. I'm nibbling a few shares on a few stocks that I want to like build a position on, but I'm not doing anything big. So yeah, that is pretty much it. Thanks for watching. Make sure you guys subscribe to this channel as I'm trying to hit 100 or 1,000 subscribers by the end of this year. So any single one of you that subscribes will help me reach that 1,000 mark a bit sooner, so that'll be really appreciated. So I'll see you on the next video.